In recent weeks, Beijing appears to have stepped up its efforts to liberalize the financial sector and to internationalize the RMB. This fits into the narrative of an ever stronger Chinese currency challenging the US dollar. Eswar Prasad, author of a new book, The Dollar Trap, has a slightly different take. Eswar, in recent weeks we've seen the Chinese government expand the band at which the currency can trade. We've also seen it announce that by 2016 it will have entirely liberalized interest rates. What do you think it's trying to do?
The Chinese government seems very committed to financial market and broader market-oriented reforms because given what they're trying to do with the economy and deal with all the problems they face, including unfavorable demographics that could slow growth, they need these reforms in order to keep economic growth going at a reasonable rate. So they seem very committed, and not only are they committed in terms of words, but they are taking actions. So I think there is support from the very top leadership to move forward on these reforms.
So does that mean that the RMB is going to be an international currency before we know it?
The renminbi is in many ways an international currency, meaning it is being used very extensively in trade and financial transactions. And as the Chinese economy becomes bigger and accounts for more of world trade, this trend is going to continue. If the renminbi were to become a reserve currency, it would also need to have an open capital account behind it, a more flexible exchange rate, and better financial markets. China is moving in this direction, but very slowly. But I suspect that on its present growth trajectory and the way financial market reforms are going, in a decade or so, we will see the renminbi become not just a reserve currency, but a significant one.
Your point, in a sense, is the resilience of the dollar. Why do you think the dollar is so resilient?
Not only does the US have size, it's the largest and most dynamic economy in the world, it has very deep and liquid financial markets, but it has institutions, an open and transparent democratic structure, public institutions like a central bank that the world trusts, and an independent judiciary. All of these are essential for a currency not just to be a reserve currency, but a safe haven. I don't see China undertaking these broader reforms.
Okay, so where would you see the currency, say, in 5 years? You've mentioned 10 years, you think that the Chinese currency may be beginning to challenge the dollar. How about 5 years?
In 5 years, I think the capital account is going to be substantially open because this is the direction they are moving in, and the moves to liberalize the deposit interest rates and free up the financial system, to liberalize the currency, are all moves in the right direction. But building financial markets so that foreign investors can have high-quality renminbi-denominated assets to hold, that's going to take a while. But still, given the sheer economic prowess of China, I think the currency will become a reserve currency. And like I said, it could perhaps account for 5 to 10% of global foreign exchange reserves in the next decade or two.
I mean, 5 to 10%, that sounds quite low. We're hearing a lot of banks talking about how the renminbi is going to grow with the Chinese economy, and the Chinese economy, by some estimates, will be bigger than the US economy as early as 2020. But you're saying that the renminbi will lag relatively.
Unless China can do what it takes for the currency to be seen as a safe haven currency. And for that, you need not just economic size, you need not just financial markets, but you need good institutions that not only domestic investors, but also foreign investors trust, so that people come to China not just for diversification or yield, but come for safety. And again, it could happen, but I think the Chinese leadership has made it very clear that it's willing to move forward in financial and other market-oriented reforms, but they've very clearly indicated that political, legal, and institutional reforms on a broad scope are pretty much off the table.
And just finally, I mean, can those institutions be built under a single-party authoritarian state, or does it need a multi-party democracy to bring around those institutional changes that you say are needed?
The evidence suggests that all the currencies that are seen not just as reserve currencies, but are safe haven currencies, are all backed up by a democratic system of government and very strong and trusted public institutions.
So the message, I guess, is don't write off the dollar yet.
The dollar may fall slightly in value, but as the dominant reserve currency, there really is no alternative to the dollar for the foreseeable future.
Eswar, thank you very much.
My pleasure.